I'd like to welcome to the stage our speakers to hear about No Hype, Just Rails, a conversation on crypto, risk, and reality.
Hi, all, and thank you for being here. We're so excited to be in Paris on this beautiful day. I'll take a minute to introduce ourselves, and then we're just going to get right to it. So we are so happy to be here because not only do the three of us have a lot to say, we talk to each other all the time. So V, Jessi, and I, we're friends. We're longtime senior legal strategy owners, leaders in crypto. And we also have a weekly Unchained podcast called Dex in the City. It's one of a number of Unchained podcasts where we talk about these issues. This conversation is very near and dear to our heart, however, because we really have been in this space for a long time. We feel really invested in the space, and we want to see it grow and improve. So I'll give quick intros, and then we'll get to the substance. Over here, we have V. V is ex-Securities and Exchange Commission. She's an ex-regulator. She has also held senior roles at Bain Capital Crypto and Anchorage. We also have Jessi here. Jessi is a former longtime federal prosecutor, national security DOJ federal prosecutor. She is, oh, and also, apologies, V is general counsel of Veda, important real-time job. Jessi is now leading legal and compliance strategy at Ribbit Capital, the venture fund. I'm Katherine Kirkpatrick Bos. I'm general counsel of StarkWare. I'm former general counsel of Maple Finance, the DeFi protocol, and chief legal officer of Cboe Digital, which was a spot crypto exchange and also derivatives exchange, so CFTC regulated in the United States. So I want to get right to it. There's a lot breaking in crypto right now. So we have a lot to say on the good side of crypto, the TradFi, degen convergence, the amazing regulatory developments that we've seen out of the United States. But we're also facing a host of problems. And what I'm talking about vis-a-vis risk is actually security risk and hacks. And the problem from the general counsel regulatory strategy perspective is when this happens, we often see a response from regulators, a punitive response that really results from certain incidents, crashes, hacks, et cetera, particularly when these issues harm retail. So we're 4 months into 2026, and the industry has lost more in hacks than it did in the entire first half of 25. So Jessi, let's start with you. Why is this year worse? And what is actually changing about how these attacks get built?
This is also an issue near and dear to my heart. Thank you all for being here and for being our great moderator always. So I just want to say first that we use the phrase retail, right, and consumers, but I think we need to reframe it a little bit and talk about the victims here and remember like who we're building this for and why we care about these hacks. It's not just because of the reputation of crypto and the crypto industry and how regulators are going to react, but rather that we want to keep the space safe so that, one, we don't hurt people, and also that we can build it and bring institutions on board and make it the kind of financial system that I think we all believe in. To get to your question, why has this year been worse? Well, it's partially because of good news. More people are engaging with crypto, more people are learning about it, institutional money is getting on board. I mean, you can just look at what's happened with prediction markets to see like how many different variety of coalitions are becoming involved. There's also sort of the political side in the U.S. in particular. There's a lot of push from the administration to get into crypto. It's making people curious in a good and bad way. Some of that has been scam-worthy as well. And so with this new money and with these new coalitions joining, there's just more opportunity for hacking. And as these as profit flows into the space, people are also building, right? And 90% plus of the builders are doing really important work and doing a really good job at thinking through, how do I build a smart contract safely? How do I protect my consumers? But there are those people that are just building for profit, right? And not thinking about what the end goal is because they see what other people are doing and think they can replicate it. And the problem with that in crypto, and it's interesting because I used to talk about that when I was at the DOJ as well, it's the crypto ecosystem is slightly different than TradFi in many ways, obviously. But one of the ways is like if one bank gets hit, it's not necessarily going to affect all banks around the world globally, right? That is different potentially in the DeFi space, because things move so fast in between projects and using sort of, obfuscating techniques, whether for good or bad. If one DeFi project gets hit, there's a potential that there's layering for other individuals to get hurt as well.
Yeah,
so that's part of it.
With a lot of these DeFi exploits, hacks, attacks, you see a lot of contagion, right? And it happens literally minutes, hours, days, weeks after. And it's just because, the nature of DeFi, and one of the things that makes it really cool is that it's very interoperable and composable. But the downside to that is when something happens, sometimes you don't even know what the blast radius is. So it's a problem.
To frame this out, one of the things I always like to say, and I'll just mention that I think all three of us, obviously we've held general counsel roles at a host of different kinds of crypto companies, but I personally talk to new founders all the time. I make it very clear, I'll give any new founder 30 minutes gratis, not legal advice, because I think it's important to stay abreast of all the different kinds of growing and emerging projects in the industry. And one of the things I always say to them, particularly if they haven't formed their legal strategy, is there's 3 big areas of risk as you're building any company, but particularly in crypto. The first is exactly what we're talking about. It's security. It's OPSEC. It's smart contract integrity. And that, in many ways, is actually less legal. You need support from a degree of functions, like legal's working with the security team. It's also physical security, of course. You're making sure your CEO is safe when they travel. So deal with that. Do you have smart contract audits? Do you have something that is justifiable based on the best standards of the industry? And then you also need to look at who you want to engage with, who you want to grow with. Who are your golden, strategic partnerships and what they demand, what their minimum standards when you're building the project itself. You cater to the universe you want to serve. The second, which we may or may not get to, is regulatory risk. Now, that used to be a much more existential risk a few years ago, but I'm talking in the United States, that's Securities and Exchange Commission, CFTC, civil regulators, where you can get fined, you can get an investigation. In the EU, that's obviously MiCA risk, very important. Although we've seen a lack of enforcement from individual EU member states, we need to keep our eye on that. Historically, what we've seen in the EU is usually after implementation of MiFID, which is kind of the TradFi regulatory regime, it took a year or two before we saw enforcement. So there is a little bit of a concern that we're going to see more kind of MiCA-related enforcement. And by the way, for those who aren't lawyers, that's the EU's crypto regulatory regime, effectively, a legislative regime. The third is, of course, criminal risk, which Jessi's uniquely well suited to speak on, but it is definitely something that any project should be thinking about right now. It's illicit finance in particular. So I'm talking about what you're building. Are you, even not on purpose, inadvertently facilitating the flow of dirty money? Are you inadvertently allowing someone to violate global sanctions, US, EU, UK, name it? If you are, then you better come up with some mechanism that justifies your project, meaning regulators no longer find it acceptable for someone just to say, it's decentralized, it's permissionless. It needs to be truly decentralized, which is a very difficult line to cross. And if it isn't, you need to consider what the market's baseline minimum standards are. So, V, I wanted to look to you for a second. Do you have any thoughts, particularly on the regulatory piece or the global regulatory piece vis-a-vis risk at this point?
Yeah, so I think, something Jessi said I think is really important, which is I think we really are moving past kind of the degen era of DeFi and of crypto. And what that means is more and more just everyday retail users are starting to engage with these products and these systems, right? And I think with that comes a lot of responsibility. So, that is like when it comes to operational security risks, right? Like this is something that a lot of people were talking about in the wake of the Drift protocol hack and the Resolve hack and like all of the ones that came before it, like just in the last 10 months or so. It has to do with like how we actually design the DeFi protocols themselves, right? Which is a very different kind of risk, right? So this isn't about like, are you managing your multi-sig keys like, carefully, right? This is a different type of risk. This has to do with things like how is your Oracle designed? What sorts of collateral are you accepting in your protocol? How can these things be manipulated, right? So these are like DeFi design decisions that also address risk, but in a very different way than operational security considerations. So I think every project has to be thinking about this. And then in terms of standards, which you just mentioned, I think one big issue with DeFi right now is that there actually aren't a clear set of standards, right? So, like if I asked you, like what is the multi-sig like OPSEC standard for like a typical DeFi lending protocol? I think you would get 10 different answers. And frankly, I think that's a problem, right? Like if we can't even agree on what good operational security is, and yet we are responsible for what happens to billions of dollars of user funds that are in these protocols, that's a big problem. And I think one thing the industry really needs to take seriously and start to coalesce around is good standards, best practices around operational security and DeFi protocol design.
Yeah, I mean, that's like a hallelujah moment right there. The truth is that industry has been waiting far too long for regulators to tell them what they can and cannot do. And we're beyond that. We've all been in crypto for many, many years at this point, and we have to stop being so defensive and worried about like, regulators, please don't touch us yet, we're not ready. It is time to step forward and come forward with real solutions, because the things we're talking about up here seem impossible. And each of the topics that Katherine covered could be someone's entire job, right? I mean, each jurisdiction of what she covered could be someone's entire job. So it feels in many ways impossible. And I just think that we can't all do it alone. Instead of fighting with each other on Twitter, let's like come up with solutions together. And there are definitely groups that are doing this. I don't want to minimize that in any way. And we could all name like 10 here right now, but it's silos for right now. And it doesn't seem to be getting better at the point. I think there's potential here, and it's on regulators as well to figure out how to make them come together, just like they have with other industries. But the time is now.
Just one quick follow-up point on that. I think, I mentioned that more and more retail users are starting to use DeFi to touch DeFi, right? And one thing I think that introduces that we didn't really have before, because it was mostly, I would say, I'm generalizing, right? But it was mostly like crypto native users who sort of, I don't want to say they like accepted the risk of loss, but I think a lot of them do. They're not going to like necessarily like sue or take any other sort of legal action, right? But now that you have more retail users actually interacting with these products, like at Veda, we build vaults. We just integrated with a major fintech platform that is not a crypto platform. So like none of these users that are now, participating in these DeFi yield earn programs, like none of their users, I don't think, are crypto users, right? So like if my mom loses $15, she's calling the SEC, right? Like that is what we are dealing with now. So I think we have to take it seriously for that reason too. Like when I was at the SEC, the number one way that we would, like the number one reason we would start an investigation is if some retail investor called us because they lost money. So I think we need to be prepared to see more of that in crypto as crypto becomes more mainstream, and we have to take all of these risks a lot more seriously.
Well, look, we're at this critical point where we're seeing a convergence like we've never seen before. And a lot of that has to do with the regulatory environment, which is good. Out of the United States, the regulators have been really open and transparent. And everyone on this stage, I can tell you, the three of us communicate with the SEC and the CFTC regularly. We meet with them informally and formally on behalf of our projects. I meet with them intellectually, having nothing to do with my project. And we are at a critical point where, at least out of the United States, the regulators want to be transparent and communicative and work hand in hand with the industry. Now, I'm not going to talk about what might happen in 3 years in the United States, because that's actually quite a terrifying prospect. However, that all being said, I think it is an environment where every project, as opposed to taking that and saying, well, YOLO, like we can do whatever we want, like there's going to be little to no enforcement action, I think we should all take the point to say, look, there's two reasons why you put security checks in place, why you might, consider doing sanction screening, why you might, consider a proactive analysis of why your token is in a security. One of that is to guard against regulatory enforcement, right? The other is, let's just step back and think about the economic benefits. And this is where I like to joke that everyone occasionally thinks of legal as a cost center, right? Especially new projects, you're hiring legal, they're very expensive. However, there's something that I like to think of as legal sales, meaning you show that your project is credible and you show that you have put into place an infrastructure for security, for regulatory, for illicit finance. And what does that do? It unlocks institutional participants. Like, institutional participants are not going to engage with crypto native companies, or they're going to hit a ceiling real quick with crypto native companies until they can get comfort that there isn't going to be risk that bleeds over into that engagement. And you can give them comfort by providing them with an appropriate, justifiable infrastructure that hits all of the risks we're talking about. One of the things I wanted to mention in particular is, we've talked a little bit about security. One of the minimum security standards we see across crypto is smart contract audits. Like, okay, that's one area that I'm often talking to regulators about, where I'm like, look, you didn't mandate this, but that is the minimum standard, particularly in credible DeFi protocols. And the industry spends most of its security budget on those audits. Jessi, is that enough, like in this environment, to get your smart contract audited and move on?
No. I mean, I've been talking both your faces off about Mythos and just like AI capabilities. And you can look
Jessi's like really very, very smart with all things AI. So I'm like actually getting a little freaked out that she's going to leave crypto for AI because she just knows too much. So
Convergence.
Please direct all of your AI questions to Jessi after the panel.
We were talking about Mythos a few days ago, and essentially it has found...
And Mythos is the scary project that Anthropic just said we can't release because it's too scary.
Yeah.
So.
And it's just one of many AI tools, but potentially the quote-unquote scariest or the biggest security vulnerability. I don't want to go too much into the AI realm, but what I will say is that it was able to find vulnerabilities in foundational software that has existed on the internet for decades, right? And though that software has been checked millions and millions of times, but Mythos is a new technique that can be really helpful for security, or it can be really harmful for security. So think about that applied to a smart contract or a blockchain or anything that hasn't been tested 5 million times. How do we think about security in that age? Which I already said this problem is impossible, so let's just add another layer of impossibility on it. But we should have started thinking about this like a decade ago, obviously, when we were starting to build the technology. But, banks obviously still have hacks. The government, I'm sure both of our data working in the government has been hacked. So no one is perfect, but we're trying to build something better and safer that gives consumers choice and access to, the financial system in a way that they didn't have before. The last thing we want to do is create that in a way that also simultaneously makes them less safe.
Well, this raises another question. We were joking about this the other day, but for a long time, crypto has talked a lot about AI, meaning, okay, crypto really wants the AI association. I was joking that I feel like these days you're like at a family barbecue and crypto's like the tiny cousin with glasses, like yelling to the cool cousin over there, like, hey, hi. And the AI is kind of like, stop talking to me. Do you think, both of you, I'd love your thoughts on, we're at a critical point where the focus has shifted, like the venture money is shifting from crypto to AI, and that's been giving the industry some agita, of course. However, I think we all understand that and Jessi and I to promote an academic paper that we're going to be publishing in the next couple weeks about programmable risk management for autonomous agents. And part of that paper, part of the thesis is that on-chain is the place for AI, right? And particularly for autonomous agents. They complement each other in a multitude of ways. Like, with the AI crypto conversation happening here, like, do you think crypto should be associated with AI as it builds? Like, do you think crypto can hitch its wagon to AI's star? Or is that more of a security risk for crypto as we move forward?
I can jump in here. I think blockchain should be one of the avenues for agentic finance, but not the only one. But just to come back once again to the word convergence or coalescence, I forget what you used. We are trying to build a better financial system, right? Like, whatever the technology is, as long as it's safe, faster, more efficient, like, I assume most people in this room want it, right? And as we talk about like the TradFi, fintech, crypto convergence, they're all in many ways turning into the same, right? And in a perfect world, agentic finance can just add to that. And that's why I think part of VC money is going also into AI. I mean, we are part of that as well. Granted, token prices are going down significantly, but and crypto obviously is facing some obstacles. But at the same time, like, you need to have the data infrastructure, you need to have the energy, you need to have the capability in order to be able to figure out how do we build this all together. So I don't think, or I hope that in the future, it's all sort of one.
So one of the other things that we have referenced, like we talked about security risk, we talked about OPSEC risk. V, you have written quite a bit about kind of market macro functions. Like, I love V's paper that she published recently on best execution in particular, because it goes to kind of the Aave issue that we saw a few weeks ago. I think we're all familiar with that. But TLDR is that someone swapped millions of dollars into a fraction of that, and it got actually less press than I would have thought, considering the staggering loss. And that never would have happened because TradFi has what's called best execution requirements for trades. But V, talk to us about market mechanics risk, those types of issues as kind of crypto matures, frankly.
Yeah, so I alluded to this earlier, but a whole category of risk that I think doesn't get as much attention as like OPSEC risk or like smart contract risk is design risk, right? So how protocols are designed and even what some of the inherent features of the blockchain are, things like transparency in like order execution that give rise to vulnerabilities that can be exploited. MEV is one example, right? It's just kind of a feature of the nature of blockchains because orders are public. That means that sophisticated actors can exploit them by front-running transactions, sandwiching, and other kinds of attacks. And that sort of acts as a value extraction or like a tax on users. And in this one extreme case that Katherine just mentioned, a user who executed a swap, a trade, actually lost, like, I think over 99% of the value of that trade in execution, right? So this was not like because the market price of the assets had changed. It was because MEV bots basically took over 99% of the value. So obviously, that cannot be the financial system of the future. Like, something needs to be done about that. And the good news is that there actually are a lot of projects, both on like Ethereum, Solana, and others, that are innovating with different design experiments to try to mitigate some of the harmful effects of MEV. Things like making mempools private, doing batch auctions. Solana's doing experimentation with things called trusted execution environments. So you are seeing some innovation on the design side, and I think it's really good that they're acknowledging, right, like that builders are acknowledging that this is an issue, and that if we do want DeFi to become the financial infrastructure of the future, that we do have to tackle these kinds of problems. So that's MEV. I mean, you know, with the recent drift, resolve, and other kinds of attacks, the issues there had to do more with like oracles, right? So oracles play a pretty important role in a lot of DeFi protocols, particularly lending protocols, because they determine the value of assets like collateral. And because of the nature of these protocols and of the blockchain, right? They're transparent, they're permissionless, they're composable, interoperable. That gives rise to opportunities for bad actors to manipulate those things, right? So a very common dynamic you see is someone will like manipulate an asset so that the oracle misprices it, and then they will borrow against that inflated collateral, withdraw as much like funds as they can until the system either corrects it or someone catches it or something like that. It was basically like what was behind Drift and some of these other recent attacks. And so, you know, I think there are things that you can do to mitigate those kinds of risks, right? You can impose like circuit breakers or longer TWAPs. You can have liquidity caps and things like that. I think that would help. The thing you have to recognize, though, is that there probably will be trade-offs, right? I think it will make capital efficiency, like it'll impact capital efficiency, maybe like the open nature, and maybe increase some of the friction of these protocols. But it's, you know, these are design decisions that builders have to make, and we have to balance, again, things like having these systems move really quickly and being very open and transparent and permissionless. We have to balance that against, you know, do we want to take measures to reduce the risk of harm and losses and keep users safe? But I think the important thing to acknowledge is that there are trade-offs.
It's a great point. I mean, one of the questions that I want to ask both of you, and I'll start by answering it with my thoughts, is like, what does crypto need to change right now to reframe our security conversations? And what is the most important thing that crypto needs to do right now to mature? And so I'll answer my own question, and then I want to pass it down the line. I think we're in a really tough spot in a lot of ways. Like, there's a lot of opportunity, but we are also seeing some factions, right? It's a bit of a hot take that crypto needs to mature, right? Because there are projects that are not targeting institutions. There are projects that are still targeting degens and retail users, and those projects have different goals and different expectations. There are other projects that are actively trying to, you know, work with JP Morgan, okay? And that's fine. I think there's space for the spectrum of projects. I am in favor of having these conversations. Most importantly, there's certain pockets of the industry that don't want to talk about this because there's a fear that regulators will seize upon these conversations and mandate certain bare minimums. I think we need to pair conversations with advocacy that makes it clear that not all of DeFi should be bucketed into one category because it is different. This has always been the most fundamental challenge in regulating crypto, in that you can't regulate NFTs the same way that you regulate CeFi, that you regulate DeFi, that you regulate L2s. We're looking at apples and oranges and bananas. But the other important thing that I would like to see is I would like to see more projects talk about how the beautiful nature of cryptography itself can work to make this ecosystem safer. And, you know, I'm a little biased, but StarkWare is really the OGs of zero knowledge proof technology. I was on the SEC's roundtable for financial surveillance and privacy. I think we should have a much more vocal conversation in English, meaning with normies outside of crypto, about, for example, what ZK proofs can do to create safety across the ecosystem, efficiency, safety in and out of crypto for that matter, like identity, publicly available information, etc. So we need to be more vocal with cryptography-based solutions that make this ecosystem safer. Jessi, what about you?
I agree with all of that. I want to take a bit of a different angle. I think, I don't want to speak for everybody in this room or this conference, but you joined crypto for a reason, because you believed in it, because you thought the financial system could be better. And I think we need to come back to the word that V said in responsibility and put victims and consumers back at the center of our conversation. Frequently, when I talk to projects or when you talk about the phrase illicit finance, it just is a phrase that no one really thinks about what that is. And it's a tangible thing that actually really hurts people. I don't want to get too soapboxy up here, but DPRK in particular has been doing this for a long time at North Korea, and they're just getting better. And they are one of many, many players. And you can see with our geopolitical situation right now that a lot of bad actors around the world are taking advantage of crypto. I mean, you can see what Iran is doing with the Strait of Hormuz. So there's just endless of these stories. And it's not just a story in the news. It is people that we are giving access to. We are letting hold their own money in their self-custodial wallets that we are connecting to our front ends that are getting affected by this and their money being taken by bad actors. So whenever we use the phrase illicit finance, whenever we think about what we're building, we also have to layer that into the conversation and not just be like, yeah, I don't want illicit finance on my space, but I'm tired of that one.
Yeah, I think it's really important to think about, like, there actually are victims, like, on the other side of this, right? It's not just some faceless, like, illicit actor. There is real harm. And so you mentioned, like, a lot of times I think, a lot of the industry is reluctant to discuss this openly because we are so scared of regulators overreaching or overreacting and overregulating in response. Well, I mean, the easiest way to get them to really crack down on you is to not kind of self-regulate and self-police, right? So I said earlier, I really hope we see the industry converge around better standards and best practices around operational security, around like good DeFi protocol design. The other thing, I talk about a lot is one thing I think we should think more about and talk more openly about is how blockchain's inherent properties actually allow us to design systems that really are fairer and more accountable and have more integrity and are more resilient. And I mentioned some examples of what like projects on Ethereum and Solana are doing around mitigating harmful MEV. I think that is such an interesting and promising and encouraging example of us using the properties of blockchain itself to design systems that are fairer, right? And there are actually so many examples of this that I think we should really be encouraging and showcasing. So like another example is at Veda, I mentioned we build vaults. We just wrote a letter to the SEC asking for vaults to be recognized as what's called a qualified custodian. And all that is it's something in the US where if you are an investment advisor, you have to keep your clients' funds or assets at a qualified custodian. And usually that's things like banks and broker-dealers and other registered entities. But we wrote about vaults and how vaults are a really interesting kind of infrastructure that in some ways can achieve a lot of the same safeguarding goals as intermediated regulated entities because they are programmable and you can enforce things like no misappropriation, no commingling. You can actually enforce that in the code itself, right? So I think there are just so many interesting design things that we can do in crypto that really leverage the properties of blockchain technology and decentralized systems itself to make a lot of these systems fairer, to reduce risk and things like that. And so that's something that like I want to see a lot more experimentation on. And I think that will go a long way towards regulators looking at us and seeing actually, like these systems can actually achieve a lot of the regulatory goals that we think are important, right? So I want to see more of that.
I think we're almost at time. I actually sat in the worst. 58 seconds. Perfect. So I'm going to pass it along really quick to have any final notes on this topic or anything else, ladies. The one other final note I'll make is what I'd love to see in crypto is a demonstration to regulators and legislators, and I'm not just talking about in the US. We are in a very critical time where a lot of jurisdictions are more friendly and open to crypto. And actually, we had Commissioner Hester Peirce on the podcast last week, and her one takeaway was come in, talk to us. Like, you're safe to engage, particularly in the United States. So the regulators need to see a diversity of projects and a diversity of people. Like, obviously, this is an all-female panel. One of the reasons we started the podcast is we wanted to really fight the crypto bro narrative, which is really damaging for getting policy done and legislation done. So make sure that you are advocating not just on behalf of your project, but the diversity of all of the people you serve, like your users, your partners, your constituents. Like, we need to convince Washington and all of the global regulators that the average individual in crypto isn't like a 25-year-old dude wearing a hoodie, okay? Obviously, that's not the case. Look around. So that's my takeaway. Jessi, V, any last comments?
I can't top that.
No, me neither. We didn't wear hoodies today for a reason. Yeah.
I mean, I'm a Midwestern mom, so I'm like very effective at policy because I'm usually not what people come to expect at a degen project. But everyone, thank you so much for having us. Check out our podcast. Check out our articles, even if you want to run them through Claude and get a summary. Thanks so much.
Thanks, everyone.
Welcome to Signal Week.